Hi, I'm Akmal Hassan. I'm the Managing Director of AIIMAN Asset Management. Today I'll be sharing on the opportunities in the Shariah Equity space. Before any particular security is to be classified as Shariah compliant equities, that particular stock have to go through a screening methodology. So in this screening methodology, there is a very specific way of screening. And after going through that screening methodology, primarily in two areas. One is the business activities, and the other one is on the financial ratios. Once that particular stock has been cleared on those two screening, and then if they were to be classified as Shariah compliant equities, and then it can be considered as what they call halal stock. So as far as the investment is concerned, I think when it comes into the specific stock, whether it is attractive or not, it's pretty much depending on the fundamental of the company. So whether it is non-Shariah compliant stocks or Shariah compliant stock, if that particular stock fundamentally is not attractive, I think the quality of that particular stock would not be attractive to the investors as a whole.
Hi everyone, my name is Terence. I'm Senior Portfolio Manager under AIIMAN, and the sector that I cover is the technology sector. In terms of research process, how we generate ideas for portfolios, we take stock examples from the benchmarks or indexes. From there on, we will filter down through countries and also sectors. Then from there, we decide whether a particular sector has a growing theme or a recovering theme, or in essence, if let's say the recovery theme or growth theme starts to slow down. From there on, we will drill down into stock specifics, but typically we will go for more dragon head companies. So these are companies which has been in the sector lead. From there on, we will analyze the company, and then on, what we will do is we will apply a Shariah screen. We will need to know whether the corporates that we invest in are Shariah or not. So a few of the parameters that we look at are business that they are involved in, and also the financial aspects of it. So a company cannot have too high debt, cannot have too much cash, and must have a very good solid quality management.
When it comes into the attractiveness of the so-called halal stocks, I would like to believe that more often than not, the nature of Shariah compliant stocks is perhaps to a certain extent defensive in nature. Why is that? One of the main reasons is because of the screening methodology. It has to go through the financial ratios. So in that sense, it's already been screened on the first part of the risk management side.
So in terms of attributes for company, be it sector lead or any new emerging companies, few key factors that we look at are first, the quality of management, the focus of management in terms of driving the business. The other factors will be the financial factors. Firstly, strong balance sheet, strong cash flow. We also look at the valuations of the company. If it's too expensive, we will probably look to invest in it at another cheaper period. We also look at the dividends that they provide. As a growing company, what sort of, let's say, perhaps if the cash flow is strong, we will look towards dividend payment.
Investors can benefit from having Shariah compliant stocks in their portfolio by giving themselves a diversification angle. To a certain extent, Shariah compliant stock could be defensive in nature because of the screening process that it has to go through. But on top of that, it also provides a growth quality. I think not many knows that stocks like Microsoft, Nintendo, Tencent, they are actually growth stocks, but they are also Shariah compliant stocks. So I think it gives a diversification for the investors for their portfolio, but on top of that, it also provides the growth opportunity if they are looking for a growth angle for their portfolio.